Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by United Wholesale Mortgage.
Does your wholesale lender do this for you? Free customizable marketing materials, online loan tracking for your clients, returns your past clients to you, and complimentary client retention campaigns. Don't you think it's about time you found one that does? Partner with United Wholesale Mortgage and receive these benefits and more.
Welcome to another edition of Master of the Markets. I'm Barry Habib, and this is created exclusively for Mortgage News Network. The roller coaster ride clearly continuing here. Up and down markets, both in stocks and bonds, making it very difficult to navigate, and predominantly news out of Greece. But this week that just passed, we had seen some additional news from the Fed, essentially saying that they really don't have the backbone to hike interest rates anytime soon. And remember the makeup of the Fed. There's 10 voting members out of the 19 Fed members. And those voting members who rotate, 7 of them are what we call doves, very accommodative. Only 2 are hawks, more apt to tighten interest rates, and 1 centrist. So tough for them to pull the trigger. Yeah, they jawbone and talk a good game, but they really want to see some more inflation news. And while last week was a quiet news week, this week the news calendar heats up, highlighted by some inflation data, both on the wholesale and retail side. Now, at the end of this week, we're going to see CPI, Consumer Price Index. It's one of 2 inflation gauges that the Fed looks at. The other one is PCE, Personal Consumption Expenditure. That is supposedly the Fed's more favored gauge, but they look at both pretty closely. Now, the CPI is very tame. What they're looking at is what's called the core rate. It takes out food and energy prices because they can be more volatile and dependent on other things such as weather conditions for food or pipeline disruptions, not really economic situations that a move by the Fed could sort of step in and where the Fed can assist if there's accommodation needed because they're trying to spur the economy or hold things back if the economy's heated up. These are situations that are controlled by weather and other factors that a Fed move wouldn't be able to contribute any. So they strip out the food and energy sector. They look more closely at the core rate of inflation. And on the core rate of inflation, it's very tame right now. It's at 1.7% on a year-over-year basis. The thing of it is, I believe that that's about to change. You see, the Fed said that they'd like to see inflation move confidently towards 2% before they pull the trigger on a rate hike. But what people are not looking at and what they're about to potentially see is that starting with this week, we get the inflation report for the month of June. So the way this works is that it looks at the most recent 12 months, and that gives you the year-over-year figure. So when we get June's number for 2015 this Friday, it will replace the June number from 2014. And here's the thing. As these numbers over the next few months get replaced, the previous year, 2014, the bar was set very low. Respectively, June was at 0.1%, July 0.1%, August 0, flat, and September 0.1%. So over the next 4 months, if we start to see inflation even modest at 0.2% per month, well then inflation on a year-over-year basis around the time of the Fed meeting will be well over 2%, and that could put the Fed in a position where they may have to hike rates. And here's the interesting thing. A Fed hike actually probably helps mortgage bond prices. It's been a very, very volatile week. Housing still remaining extremely strong. Inventory levels are tight. Real estate market's solid. But as far as interest rates go, of course, overall, long term, yes, they're going to remain very attractive. But this volatility in between, which way are rates going to go? I expect more volatility, and what we'll need is a very tame inflation number. And if we see some tame inflation by the end of the week, we could see interest rates settle out. But if that inflation number on Friday comes in with a bit of a bump, I think you'll see interest rates move higher, that 10-year Treasury towards 2.5%, and we could be in for some excitement there. If you want to follow along day by day, get our alerts, which people have been raving about because it saved them ahead of intraday reprices from the lender, as well as real estate data from all over the country and tools to help you turn more conversations into transactions. Hit the link below, get a free trial, or sign up. You guys make a lot of money per transaction. Do a few more transactions. It'll dwarf the cost of MBS Highway. All right, hope you have a great day and see you next week. Bye-bye.
Today's Master of the Markets was brought to you by United Wholesale Mortgage.
This is Mortgage News Network.